Hi, Ben.
Hello. Hey, Basil. Sorry to break up the rock concert.
Not exactly.
So I got your Q's trade, which is outstanding. Great job on that.
Thank you.
And here's the question. So the way I understand the Chapman wave, going up, you can expect to go an F or a G, but going down, it's assessed different, right? So the troughs are assessed different than the peaks. Correct?
So let me just go right to that point.
There's other. Well, here's my ultimate question:
yes, please.
So when you now look at these reverse or these inverse ETFs, essentially you're looking at the core base ETF going down, but obviously the inverse going up, making peaks, and the base making troughs. So if you assess the base differently than peaks, when you do an inverse ETF, how can you evaluate the peaks when you don't evaluate the bases the same? Does that make sense?
No, it's a fantastic question. I've dealt with this question for decades because you would think that there's an absolute correlation. Now, this is going to be very interesting. If you look at the TBT, which made a peak D, this is the inverse of the T-bond 20-year fund. It hit 39.86 on the 21st of February. What letter was it? D. If you look at the TBT on the way down, where did I just type that? Did I type in the wrong place? TLT. Oh, TLT. It went to where? It went to a trough D on the way down at 116.51 on what date? The 21st of February. The TBT's high was on the 21st of February. So if you can get an exact mirror image, not all the ETFs do that, especially when you're talking about doubles and triples. They might miss by a penny, so you're going to get a trough that's in one and maybe not a trough in the other. But usually the one-to-one, like the DOG, one of the reasons on March the 6th of 2009, I was able to pick the bottom for subscribers, the exact day, the exact couple of hours of the low. And remember, the S&P made its low on the 9th over the weekend, so it was Friday for the Dow, and then 666 on the Monday for the S&P, was because the DOG was giving me this exact same peak D signal, and I thought, aha, all my indicators are suggesting there should be a low. I had a time price match. I had a whole bunch of things going, and all I needed was to get the DOG to give the same signal. So most of the time, if you're looking at the mirror image and it's a one-to-one, not a two-to-one, it does happen, but I prefer to say that the one-to-one isn't exact, but it can be really close. And when it lines up, that's really good. And I think I've answered your question, but I haven't answered your question to the nitty-gritty, which you haven't really, I think you've thought of. I'm not sure if you've articulated. And that would be, what are the characteristics on the way up that are different to the way down in the technical tools I use? And there is a difference. And what I found over the years, for instance, in the, you see the way the MACD made a kind of a double top just to coincide with the, it was a higher 9-period differential in the TBT back on the 14th of February at 39.23, and yet the actual top in price, not in the MACD, not in the stochastic, was a little later. And there was the divergence I was also looking for. I mentioned it to subscribers. I thought that the TLT was about to start a rally, but the rally needed to really get into the 120s to say, hey, this is now much more serious for the downside in the market. So we're in the TLT, just to kill two birds with one stone, we're now at 120.13. We were not there. We were only in the 118s yesterday. So I think that this is, in fact, starting to become a little more serious. But you know what I'm going to do? I hope I can do it this weekend for subscribers. I've been wanting to do this for a long time. I might even do a webinar sometime on it, but I'm going to at least show you that in these very sharp single-digit declines, if you look at, let's just go to the Dow weekly chart, the single leg A to the downside very often can produce a very powerful up move. Even when you're looking at the daily, which went to a trough C, when you get that kind of power, you don't always have to go to a D to get a very strong bounce. So I think I'll try to articulate the difference between the move up, catching a top, and on the way down, trying to catch a bottom. Over the coming week or two, I'll try to add it to my newsletter.
Well, I think the million-dollar question is, I can
Hold
wait.
on with Ben. Ben, let me allow you to finish your question. Question away.
Yeah. So ultimately, when we assess, let's just say the cues, right?
Yep.
So you can either look, you play it going down. So you take a short position and you play the SQ QQ. So you can look at two different ways. You can look at the peaks of the triple inverse SQ QQ, or you can monitor the base going down. And when you look at the Chapman wave, what I'm assessing is that since you evaluate going down versus going up differently, to me it seems like it's a lot more important assessing the cues, the base going down versus counting the peaks of the inverse going up. That's really the point.
Yes, correct. Except that the one-to-one does have a way better correlation than, say, the double or triples. Let me also say to you that the reason why I've found over the years that it's the peak D and onwards where I start to look at what can happen, can it recycle, etc., is because of the manner in which the MACD and the stochastic are calibrated. And on the way down, you see the sharp move that we had from the peak E top in the QQQs, the Power Shares QQQ Trust Series. There was a peak E at 170.95. It was a two-bar reversal on the 26th and 27th. And then what happens is it comes down really sharply. It goes trough A and then a huge leg B, lowercase b, then a big bounce, and then a one-to-one relationship to the 150.13 low of the ninth. Goes to a leg C. That was an 18% correction. The speed with which we came back and made a new all-time high, that is, I wouldn't say it's remarkable. Yes, it's been done before, but mostly it's been done with stocks, not necessarily that I can look at with indices. And that's why this is possibly just the start of a move. I might have to redo this whole thing again, because how we rotate, I'm really pleased that the VIX is not skyrocketing to the 19s. It's only in the 16s. That says there's some disbelief. I'm happy that the short-term trading index is still under one. It's at 8.89. There's a lot of disbelief here that we can go down deeper. I prefer that. But the MACD in the daily is still very good. And the stochastics at 88%. I'm saying this is going to need speed to the downside. And we need to see at 170.66 right now. We need to see the cues. I would put it no later than Tuesday with very minor bounces with closes with a red candle. That's the one I would have to see now to really go. You know that technically this is the first day of the peak because there hasn't been a new high after D. That's number one. And number two is I haven't officially got even a sell signal yet. It hasn't closed underneath the 9-period moving average. So what I tried to do is, using all the techniques that I have, try to time it. We were within not even like 50 cents or something from the all-time high. Got the short, but this is the strongest, one of the strongest sectors in the entire market. I don't think they're going to give up that easily. So we are very lucky that we have the room, having been so close to the all-time high. So I'm just playing it one by one. The 120-minute QQQ.
Over the next couple of days, if you want to do a little more of a technical deep dive, I'd love to understand a little bit better why you don't necessarily go down to the trough D's, E's, and F's going down, versus you typically like to see the peaks D's, E's, and F's going up. Is it right? Isn't that kind of a
Now,
fair question?
okay, so there's something else. So you're very well aware of my arch formation, the arch formation that has the left side, right side price time match. So I'm going to try to introduce that. Maybe this weekend I'll try to show that if it's just a normal move to the upside, no matter how big, and then a normal move to the downside, you will get your troughs going down. It's in this bear phase that you spiral to the downside. It's the Grand Canyon cliffs on the left. And that's really the difference. And you'll see how big the MACD is and the stochastic, how sharp. And that's where I learned, hey, don't wait for those Ds on the way down, because the motion on the way down is much deeper. But if it's just a normal, the saying always is you get the escalator up and the elevator down, whatever it is, meaning that you come down really sharply. No, you don't always come down very sharply. I mean, I can't do it right now because I've got other things going on, but I can show you not dozens, not even hundreds, but thousands of charts that have made the pattern that I talk about, that arch formation. And in chapter 13 of my CD, I've got it right here, and I'll show this is the arch formation. And you look, in this particular instance here, you've gone, this is slide 296 S&P way back in August of 2005.
And that same arch formation you don't see going the other way, right? Because it's a different psychology going up versus going down, I guess, more or less, right?
Right, and then on the way down, you could see all the way down to a D. If it's just this normal move up and the same number of bars on the way up to the number of bars on the way down. So that's the difference. The difference is in a bear phase, you could go down like a single leg A or a single leg A and then just a nominal little peak, a trough, and then boom, down again, and that's it. You're done. So you have to modulate your thinking to whatever specificity you're looking at in the chart. And in this particular instance, as I say, look, the QQQ is now up 23 cents at 171.94. I have to tell you, until I see closes below 170, I'm just saying this is the first attempt. Perfect timing, got nothing. The market has no idea that it was perfect timing. If it wants to go to an E, it'll do it.
Basil, thank you very much.
Thank you very much, Ben, for good question. I'm going to try to deal with it over the coming week.
Great, thank you.
Thank you. So, folks, this is what I wanted to show you. The IWM,